Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for March the 9th, 2010. Now with that said, we're going to start our trades for tomorrow with the heating oil contracts. We're going to first identify our pivot support. We can see that we have this crossover that's taken place from Vantage Point on or about February the 20th, 2010. We've had a sharp move up from the crossover in the 198 area all the way up to the 208. We, however, then subsequently moved aggressively lower, but the buy signal is held. We're now moving up. We can see here the candlesticks are in constant contact with the Vantage Point predicted exponential moving averages. We're now basically running off the 3 and 8 day predicted exponential moving averages from Vantage Point. So what we want to do here now is we want to identify our key pivot support. That would come in at our first level, 2.0919, 2.0690, and 2.0406, which is our key level of pivot support in this particular case. Excuse me, with a close of 210.55. So for tomorrow, what we're going to do is we're going to go in, have a look at the daily report. First of all, we've identified our key levels of support, our pivot support, areas where we're looking for the market to come back and retrace to, only for us to turn around and get into buy positions. So looking at the market tomorrow, we can see 212.23 is a high, 208.10 is the predicted low from Vantage Point. Neural index pointing up, predicted differences all positive. Everything looks good there. We can also see with the Vantage Point software, we also get the a series of the closes of the multiple days. We can see where the market closed. Is it continuing to close higher? Is it moving lower? So as we can see here, 210, I'm just going to move this up so everyone can see it. 210 is the highest close we've had in some time. So again, we don't want to be afraid to buy high and sell low, providing everything lines up. So with Vantage Point, we can see clearly that we have that. Now what we're going to do is we're going to go in, have a look at our three major short-term, medium, and long-term crossovers to make sure everything looks good there. Now we're going to hit apply just so everybody can see this. Our short-term crossover again took place end of February, mid-February. We got the short-term crossover that continues to hold. The medium-term crossover from Vantage Point, again, some volatility bouncing off the predicted 10-day simple moving average, however still staying in a buy formation. Very interesting formation here actually on these wicks of these candlesticks, how we can see how they progressively move higher. We get higher highs and higher lows. That's a good indication of a move higher. Now we can see here on this medium-term crossover how the wick of the candlestick, which is the bottom of the daily range, is in constant contact with the predicted 4-day exponential moving average from Vantage Point. Very interesting that we observe that. Now looking at the long-term crossover from Vantage Point and hitting, we're again going to hit apply here so everybody can see this. Clearly no sell signal here whatsoever. We've got the crossover on the long-term crossover, took place, believe it or not, about the 10th of February. So we've been in this uptrend ever since. Now what we're also going to do here though, we're going to apply the Vantage Point indicator, which is the predicted true strength indicator, the predicted TSI. We can see here that it crossed over in oversold territory about February 15th or so. It's moved aggressively higher. We're now getting close to the overbought territory, but not yet. We can see how our trigger tried to cross to the downside. It bounced off of our trigger and is now moving higher. So everything looks good for this to continue its move higher. Now we're also going to in turn add the predicted RSI from Vantage Point. Predicted RSI is in overbought territory sitting at the 80 level. That of course is a concern. Now even though we're moving higher, the predicted TSI from Vantage Point, using that in conjunction with the predicted RSI, you can see how they give two different signals. It's warning us that it's overbought, but the predicted TSI, which is Vantage Point's own indicator, is telling us that it is overbought, but it still has room to extend. So it's very important that we take notice of that. That's why I like to apply multiple indicators from Vantage Point, not just focus on one thing. So with that said, I'm going to take off the predicted RSI for a moment here, and I'm going to put on the predicted MACD from Vantage Point just to see how this looks. Predicted MACD, very similar. It tried to bounce off the trigger to the downside. We can see here that we're above the zero line. That's positive for a move higher. Bouncing off the trigger line, moving higher. We're not in overbought territory yet, so everything again looks good for this to extend higher in the heating oil contracts also. So with that said, I'm just going to take this off. I'm going to leave the predicted TSI on here from Vantage Point for a moment. Then what we're going to do is, again, we're going to do a little bit of comparative analysis to see how the heating oil contract stacks up against the actual light sweet crude. Again, there's usually what we can see is a very high correlation there. So what we're going to do is put them up side by side so everybody can see this. Now we're just going to move this to the New York light crude, so we can see that the crossover on the heating oil contract took place almost the exact same time it took place on the New York light sweet crude. So it's very interesting, and the formation is also very similar. Now again, looking at the predicted TSI from Vantage Point, very good to point this out here too, that it also running very close to the overbought territory, but has not yet made that crossover. So again, we can take from that with this, we're still in this buy formation with New York light crude. We have room to extend. This translates into the heating oil contracts will likely also move higher. So it's very good to use a comparative analysis to something that you're trading. Not just, Vantage Point does that in the program anyway, but it's also nice to do it away from that using the other markets. Now, with that said, we can see that we have a good correlation there. So that's our first trade for tonight. And again, we've identified the bottom here. We can see that these wicks are staying in constant contact with the Vantage Point predicted 3-day exponential moving average. The predicted low for tomorrow is about the same at the 208. So we're going to use the 208 level to get into our buy position tomorrow. All stops will be below $2. $1.99 would be always good to just stay out of that intraday volatility and just to be safe. So that's our first trade for tomorrow. Now our second trade for tomorrow, we're going to be going into the equity markets. Specifically, we're going to be looking at the S&P 500 continuous contracts in the futures market. So first thing we want to do is we've identified we have this crossover. The triple EMA has taken place on Vantage Point. This took place about February the 20th. We've got this buy signal. Key areas of pivot support now come in at 1109.71, 1120.49, and 1131.33 with a close of 1137.10. So essentially, as long as the market stays above 1109.71, which is the 18-day predicted exponential moving average from Vantage Point, then we remain in that buy formation. Predicted TSI is hitting overbought territory, but we still have room to extend here. Important to note that. So we've had some volatility today, but we're going to go through our crossovers here, see how everything looks on this in the short, the medium, and the long term.